Welcome back everyone to the Money Control live stream. You are watching Markets with Santo and CJ. Well, I warned you guys that we are in for an action-packed day, and boy, I did not want to be proven right this way.
No. CJ, there goes CJ again blowing his trumpet. In fact, yes, you did say it was an action-packed day, but you are gloating over the fact that the mood in global markets was like quite upbeat. You said we are set for a green start. And I think nobody could have predicted that the day was going to end something like this.
Absolutely. I mean, the Reserve Bank of India has just thrown a googly at everybody. Nobody saw this coming. The RBI came out today with a statement at 2 p.m. and the statement came because they held an off cycle, or what do you call a non-scheduled monetary policy meeting of the Monetary Policy Committee, and the Monetary Policy Committee has unanimously, Santo, decided to raise interest rates by 40 basis points, not even 25 basis points, which is generally expected. And okay, market was expecting the RBI to raise rates, by 25 basis points in June after, the dilution of the accommodative stance in the April meeting. But a 40 basis point hike out of the blue between two policy meetings just took everybody by surprise, and it can be seen in the performance of the benchmark indices right now. Nifty and Sensex are down about 2.5% when we went live. Domestic bond market is in turmoil. The 10-year bond yield has shot past the 7.4% level, and this is the first rate hike that the RBI has done since August 2018. And I wonder if this is the start of a new cycle.
Well, this was in the works for some time. There was no way that India could have been isolated when the rest of the global economy was going around hiking rates. Now, there is a clear signal from the RBI that inflation now needs to be brought under control. And CJ, my gut feel is that probably you are going to see more pain for some of the second line companies which are more sensitive to rising interest rates than I would say the large cap companies.
Yeah, I mean, there is a lot of distress today in the market, but I think there is a little bit of silver lining, I mean, for equity investor, and that is in the commentary of the, the RBI Governor Shaktikanta Das in relation to the economy. He mentioned that the rate hike is largely to ensure that there is macroeconomic stability, in order to ensure that people do not start expecting that the high inflation that we are currently experiencing is going to become the norm in the future as well. Secondly, he underlined the resilience of the Indian economy on the face of what appears to be a slowing global economic recovery, and he pointed to some of the fundamentals such as a high forex kitty, a largely controlled current account deficit, and overall projection of 7 to 8% GDP growth in FY23.
I think that's just trying to kind of sugarcoat the bitter pill, just like those doctors before administering a shot to kids, they always say that this is not going to hurt, this will actually make you strong and stuff like that.
Well, Santo, but I just to counter your point, I think I'll just utilize what Governor Das said, and he said that the rate hikes are going to be a good pill for the economy in the medium term. It's going to be improving the growth prospects, because inflation can sometimes be bad for consumers.
Well, again, the other silver lining is that these are the kind of events that give you opportunities, So already everyone was saying that valuations are looking pretty stretched in most sectors, and when you have sudden events like this, and when prices come crashing down, maybe that's the time you need to be ready with your shopping bag and go looking for some good stocks to add to your portfolio.
Well, that was what the RBI did, but there was, besides the RBI, there was also a lot of action in the specific stocks, and we have a lot to catch up on, Santo.
Yes, starting with PowerGrid Corporation, this stock has been on the rise for the last few trading sessions, and according to MC Pro, this is being driven largely by sentiment and not really backed by fundamentals. On a price to book basis, PowerGrid is quoting at about 2 times, which is higher than its historical average. And lastly, the general feeling is that the power crisis in some way is a good thing for power company, the power sector in general, because it means that volumes will go up even if the companies are hurting on the cost side. But according to MC Pro, deepening of power crisis is not really a good thing for PowerGrid, because on the margins it could hurt their volumes.
Yeah, especially if Discom or power distribution companies forget to pay their bills on time, which is actually what is happening right now, and has aggravated the crisis at this point of time. So that will be, I mean, it will be very interesting to see how PowerGrid emerges out of this, given that in the past cycles it has been one of the stocks that usually takes the battering on this sort of an issue.
Yeah.
That said, one stock which probably ignored all of the mayhem in the market was OnMobile Global. The stock surged in trade today after it announced that it's going to launch the inclusion of crypto payments on its esports gaming platform OnMo. Now, at this point of time, in India, they have not allowed players to, pay through cryptocurrencies. Indian players will continue to pay through real money on the esports gaming platform, but foreign players can now start participating in the games through payment of Bitcoin, which basically the company feels is them putting both the feet, in heaven. They are getting into, they are already in a high growth segment such as esports gaming, and with the inclusion of Bitcoin, they expect that probably this will result in higher, inculcation of users in the gaming platform. So that is one stock to really watch out for. Lastly, technically, if you go by technical indicators as well, it is clearly suggesting that the bullish momentum in the stock is going to sustain for some time to come. And if this sort of news flow comes, I will not be surprised if that is the case.
Well, one point about Bitcoin, CJ, now the whole argument in favor of Bitcoin itself was that it was a hedge against, the devaluation of currency and the fact that inflation would erode your the fiat currency. But now if you see, it's exactly the reverse which is happening right now. Interest rates are rising, so that being the case, would you actually see people shifting out of Bitcoins altogether? I would say that
I am not going to get into a Bitcoin versus inflation debate with you right now, because we have a very tight schedule and we will go
UltraTech
overboard.
Cement, the third stock on our radar. Again, this has been one of the stocks which has done well over the last few days. Clearly the market leader in the cement sector. However, things not looking pretty at this point in time. Slowdown, there's a likelihood of slowdown in infra spending by the government. That's because of the high oil import bill. So obviously the government will try to cut expenditure in some places, and infra spending is likely to be one of them, which means that lower demand for cement. Also, margins are likely to remain under pressure because of rising input costs, mainly that of coal. And there's another issue also, that with the talk about ACC and Ambuja getting a new promoter, there's a good chance that competitive pressures could intensify, and valuations not very supportive at this point in time. So probably you could see the stock slip further.
Well, one stock where things are actually looking quite rosy is ONGC. The stock was shining in a very weak market today, largely because global crude oil prices were higher. European Union came out with announcement that they're going to start imposing sanctions on the crude oil that they import from Russia, as well as other crude oil derivatives that they import from the European nation, and that has resulted in Brent crude oil prices going up by almost 2.5 to 3%. Generally speaking, higher crude oil prices is always beneficial for ONGC because it results in a boost in their earnings per share. Every dollar almost increases the every $10 increase in oil prices tend to add about 2 to 3% to the earnings per share of ONGC. So that is good. But if you look at it, from a fundamental point of view as well, the Q4 earnings, which are yet to come out, yet to be released, and the Q1 earnings as well, are going to be very, very strong, and the investors are largely betting on that, and that we can see that in the outperformance of ONGC to the rest of the market for this year so far.
Well, it's true that rising crude prices do benefit ONGC, but only up to a point. If it rises beyond certain levels, then they have to absorb the loss, because that's what's been happening for a while, which is why the market is not willing to give a premium valuation beyond a certain point. Also, just look at the stock price over the last 5 or 7 years. In fact, stock price was much higher when crude was almost half of what it is today, and while earnings have almost trebled between 2015 and 2022. Now this is going to be a blowout quarter for ONGC very clearly. But if you see the increase in stock price, that still there is clearly some kind of reluctance on the part of the market to give it premium valuation. So I think that is where this could probably, the stock may not really outperform as much as it should be.
Well, I think from my perspective, I think it is still not a very huge bet or a very risky bet to assume that the government will continue with its market oriented policies. It has so far suggested that it will continue doing that. You saw that with the the steep hike in gas prices that we saw in April. So I would still not be so adamant that that is a major risk to the overall earnings of ONGC.
Petronet LNG, the stock also has been inching up steadily, although the overall sentiment for the gas sector has been slightly bearish.
Absolutely.
Now, what's working in favor of Petronet LNG at this point is that true gas prices are high, but then it's a play on the assumption that gas consumption in India is only going to get stronger going forward, and gas prices, while high gas prices did affect demand during this fiscal, once gas prices soften going forward, that could be a double boost for Petronet LNG, and that's one of the reasons that's driving interest in the stock at this point.
Santo, one stock where there is no boost at this point of time is Zomato. Probably we need to provide some Complan and Bonvita to Zomato, because the stock plummeted more than 6% in trade today to its all-time high. It has dipped way below its issue price of 76. The last quote I saw was around 64 to 65 rupees per share, and I mean, it just goes to show the amount of carnage new age technology companies have taken in this market. It bleeds my heart because a lot of retail investors had bought this IPO when it came out in July, and of course a lot of them, probably the entire bunch of investors who invested in the IPO, are now sitting on losses. So therefore a moment of silence for all of them. But I mean, if you come back to the fundamentals, yes, higher interest rates, rising interest rates is a concern for a lot of these loss-making companies, because that tends to compress the valuation at which investors are willing to buy the stock. Secondly, with the entire market sentiment now a little bearish, now a little iffy, or if you call it skittish, there are concerns that how will these companies raise capital going forward. Well, we know when they were private, they could go back to the market after a point of time and raise capital at a higher valuation. But now with investors cutting down their valuations by almost 60-70%, it is going to be very difficult for them to convince investors to put in more capital into these companies, and that is probably the biggest risk that companies like Zomato face right now.
Well, I would make a
counter. Yes, gloat away. I know. I can already see the hint of smoke on his face while I'm talking to him.
Yeah, that's because just 3 weeks back you were defending the stock with all your might, and now all of a sudden when the price has slipped, you're saying
just
that
stating the facts. Just stating the facts. It's my duty. It's my fiduciary duty to let my.
But then, CJ, when you look at it the other way, Zomato and Swiggy today are the only two plays on food delivery.
Yeah.
If you want to bet on food delivery platform, and probably it's very difficult to see a third player emerge here. Now, valuations had got a bit out of whack. Of course, the company is still making losses, but even the worst of stocks, at a certain price, they do become attractive. And if you see, a lot of people are slowly turning bullish on many of the new businesses which are now trading at steep discounts to their issue price.
Yeah, but
so maybe you would be turning bearish on Zomato at the wrong time, is what I feel.
It's not about it's not about me turning bearish. It's just that the market is just not giving any leeway to this company at this point of time. And while some of its other peers have actually seen some turnaround in sentiment from at least the analyst community, Zomato so far has not seen any such reports coming out, analysts coming out who are staking claim to a turnaround in the company.
So that could be a contrarian indicator. Well,
Possibly.
Our next stock is Titan. The fourth quarter earnings were a disappointment, and because of which you're seeing
major disappointment.
Yes,
major disappointment.
Sharp increase. It was a very challenging operating environment according to most analysts who track the stock. It's down by about a little over 3%. However, most analysts, most broking houses are still bullish on that. They have trimmed their EPS estimates a little bit, but they see that already the indications for April in terms of consumption, pickup in consumption demand in terms of weddings and other social functions, that's picking up in a big way. And the management has given a guidance of about 12 to 13% for its jewelry business, which most analysts are willing to buy at this point. So you're not seeing any kind of sharp downgrade in either earnings or price targets, which is why probably the stock could still hold on.
It may still hold on, but I think yesterday, in the conference call of the company, and I was listening into it, Rakesh Jhunjhunwala, who of course has a very big holding, about 5% holding in the company, and the stock is his biggest portfolio stock. He had a very interesting request from the management. He asked for two things: A, that it is high time that you give a bonus share, right? The company last gave a bonus share probably 15 years ago. And although he was impressed by the sort of dividend that they came out with, he was really, stubborn about a bonus share coming in, and probably that is something that might support the stock in the coming quarters, because the management also indicated, okay, we will consider and we'll take it to our board and see, what the outcome is. Secondly, Jhunjhunwala was very, impressive in suggesting that Fast Track, which has been one brand that Titan sort of pioneered, the young age brand, very cool brand, but that has been in doldrums for the past few years, and Jhunjhunwala wanted the company to revive that, that brand, given that India is still a very young population, that brand still has a lot of appeal. His suggestion was that if the company can diversify the portfolio in Fast Track out of the wearables and watches, there is a possibility that they could have a revival on hand. And if that revival comes in, along with a jewelry business that is already strong, I'm pretty sure that market will still be willing to pay the premium valuation that is giving it to it right now.
Well, it's not really good news, CJ, if an old school investor like Rakesh Jhunjhunwala harps on a bonus when it's very evident that bonus actually makes no difference to the company's fundamentals at all.
Anyway, talking of another company that is down in the dumps right now is Info Edge India. Well, the story is very straightforward here. The stock is down and out largely because of what is happening to two of his portfolio companies, which is Zomato and Policybazaar. Both of them, where Info Edge has a significant amount of stake, and because of the sort of correction that we are seeing in the valuation of both these stocks, it automatically is resulting in devaluation in the investment value of Info Edge's stake in these two companies, and market is just basically pricing that in. On top of that, Info Edge itself is an internet story, so therefore, given the the environment of higher interest rates, rising bond yields, there is a compression of valuation that is happening on Info Edge's stock itself. The stock is down about 30 to 40% from its highs, around October, September last year. So it seems like the entire family or the entire bouquet of internet platforms that was Info Edge, Policybazaar, and Zomato are at this point of time down and out in the market.
Well, not the best of times for
absolutely not. Absolutely
new age
not.
businesses and new age investors. The last stock from my side, M&M Financial. The stock, again, a decent set of fourth quarter earnings. Morgan Stanley and CLSA have raised price targets for M&M Financial following the fourth quarter performance. Now, for the last 1 month, M&M Financial has been among the better performers in the NBFC space, and that comes after a prolonged period of underperformance. And some of the brokerages are positive that there is an upcycle, waiting in the rural as well as the auto space, and that bodes well for a NBFC like M&M Financial.
Well, I think that will largely be the sort of hope that Hero MotoCorp, Hero MotoCorp's management was indicating yesterday. But at this point of time, concrete evidence still is about a few quarters away. We still have to see how the rural economy will, if at all, recover from the sort of demand slowdown that we are seeing. RBI has raised interest rates. Whether that will result in inflation coming down, it will take at least 8 to 9 months for that to reflect in the real economy. So we are still a long time away from seeing any sort of demand upturn in the automobile space in particular. So yeah, the jury will still be out on M&M Financial. That said, one stock where jury is not going to be out and there is a very likelihood of a very strong March quarter earnings is Rain Industries. That is the last stock on my watch. Stock surged today ahead of its Q4 numbers. And it seems like, by all indication, the company is going to come out with a good set of numbers. If you go by the technical indicators, there is a very strong chance that the bullish momentum that the stock has displayed over the past 2 to 3 weeks is likely to continue for a few more weeks going ahead, given that a lot of short-term and medium-term indicators have turned bullish. If you go by the sort of positioning we saw in the futures of Rain Industries, there was a lot of long positions that were being added by traders, which indicates to me that they're expecting a very good set of numbers from the company. The company does not have too many analysts covering it, so it's very difficult to sometimes get your hand on what sort of expectation the market has. But given the sort of quarters chemical companies have seen from a top line perspective at least, it is very likely that Rain Industries could be among the outperformers within the entire specialty chemical and chemical space.
Well, it's very unlikely that any of you would have missed the LIC IPO, but just in case you're wondering why FPIs are still not biting at the issue, probably CJ here has some answers for that. CJ, overall, it was widely believed that, the issue was some kind of a shoe-in, and you would have investors lining up for it. But at least the indications so far is that foreign investors have been shying away.
Absolutely. Actually not only foreign investors, because I was keeping a hawk eye throughout the session since the time the IPO opened at 10 o'clock on the QIB section, because I was very interested to know how FII as well as mutual funds will, the bidding will happen from their end, because in the anchor issue, almost 82% of the anchor shares went to domestic investors, domestic institutional investors, and about only 18% of the issue went to foreign investors. So that got me thinking whether we'll see this sort of a muted demand from foreign investors even in the issue as well when the issue goes public. Now, talking to people in the foreign exchange market, we got a sense that the demand for LIC IPO is actually there. It's just that it hinges a lot on what is going to happen, A, with the Fed, and B, on how the equity markets reacts to the Fed's meeting outcome, right? Because foreign investors, sometimes some foreign investors will probably look for, a quick gain of buck, probably through listing gains and all that. Overall, market foreign exchange dealers still expect about $1 billion of inflows coming into the LIC IPO over the next 3 to 4 days till the time the issue is open. So it seems like there is a strong demand from FIs, but a lot hinges on the outcome of the Fed meeting that will happen later tonight.
And to think that we always used to consider institutional investors as long-term investors, and here actually most of them are waiting for how the market conditions would be, rather than take a call on the fundamentals.
Never judge a book by its cover, and I think I have realized that about a lot of institutional investors in this market.
Well, a quick look at the market before we wind up. The Nifty is still under pressure, down close to about 400 odd points, and it looks like
mid-cap is
all set to close deep in the red today.
Yeah, Nifty Bank is taking the beating, the most beating right now. Nifty Bank index is down about 2.5%, especially of course given that the cash reserve ratio for banks has been raised by about 50 basis points to 4.5% for the first time in a very long time that we have seen a CRR hike. An effort to basically draw out some of the liquidity, that is surplus liquidity that is there in the banking system.
But it's also a fact that according to most analysts, that in the initial phase of rising interest rates, it actually benefits banks, and more so private banks which don't have too much exposure to government securities. It's the PSU banks which hurt in a situation like this.
Yeah, I mean, at this point of time, if you look at the the list of top 5 losers, you have Bajaj Finserv, Bajaj Finance, the Bajaj twins are down over 4% right now. HDFC Bank is down about 3.4%, IndusInd Bank is down about 4%, and Reliance, a major heavyweight which has actually been carrying the market over the past 10 to 15 days, has also given up a lot of its gains, is down about 3% at this point of time.
So CJ, what's on your horizon for tomorrow?
Well, there is, with the RBI now out of the way, there is only one thing that the market will have all of its attention on, and that is the outcome of the US Federal Reserve's monetary policy meeting that will come out later in the night today. Right now, the expectation is that the Fed will raise interest rates by 50 basis points. But if you speak to a few economists, after what the RBI has done, they have a sense that we could be in for a surprise from the Fed as well. I mean, if the RBI has gone, totally, bazooka on interest rate hikes at 40 basis points out of the blue, when everybody else was expecting a 25 basis point rate hike in June, this goes to show that the intensity or the aggressiveness of the central banks is going to be very high. And if you take that into account, then the so-called 75 basis point rate hike, which probably has not happened, from the Federal Reserve's end for a very, very, very long time, that could be on the table.
My own bet, CJ, here is that it could be more likely a 50 basis point hike than a 75 for one simple reason, that no central bank would want to spend its ammunition all at one go. Let's say you do a 75 basis point hike, and inflation continues to march higher, then it is very difficult to keep raising rates without actually pushing the economy into recession, and that is something that most central banks would never want in the first place.
Point taken, Santo. I think also we have a few F&O earnings also coming out. TVS Motors, Marico will be reporting their Q4 earnings tomorrow, as well as Adani Power. We don't have a major Nifty earnings coming out tomorrow. So those will be the the key things, monitorables for the market in tomorrow's
Adani
session.
Power will be interesting to watch out for, given the run that the stock had. And with that, it's a wrap on this episode of Markets with Santo and CJ. I hope you enjoyed watching this.
Yeah, and please post your feedback on the comment section below, and follow us on the social media links that you can see at the bottom of your screen. For rest of your updates, stay tuned to moneycontrol.com as well as the Money Control app. We will see you tomorrow morning at 9 a.m. sharp. Till then, have a great day.
Goodbye.